Hey folks, we'll get started here in just a few minutes. We'll let the room fill up. It's filling up pretty quick. About 2 minutes, we'll get it. Welcome everyone. This is a special report for the Fed. If you're new to the channel, make sure you subscribe, hit that like button, everybody. Hey, this is free, right? That's all the payment you have to make. So join us and with our community and get going here. A number of things, just pulling out some of my notes here that we have to talk about. We all know things, you know, I see people aren't buying into my Japan story. It's not a blip. It's much bigger than that. It's 30 years of QE starting to fail. And that is going to be a big story. People didn't believe me back in 2008 when I said the banks are going to fail. They found out later. I think this is the big story. I know a lot of folks are, the markets are pretty optimistic. I thought it was interesting. I actually enjoy watching the halftime report. They have John Najarian, a bunch of usual people on there. These people are just so funny to watch. Kevin O'Leary was on there this morning local time. And I mean, he's bullish. The market's going to be better. It's going to, make new highs by the end of the year. Everybody's too pessimistic, all of that stuff. I've been talking to you folks about a number of things here over the past, we'll just say several weeks, is that these issues that are out there aren't just going to go away. These are very big issues. And, the Fed, whether they do 75 or not, it doesn't really matter. They do 75. They need to do, I'm with in the camp that they need to do 2 or 3% today. They need to move the Fed funds to 4%, and the 10-year needs to be, 450. I talked about this on a broadcast I did a couple nights ago, and the minimum that we need to be at with, let's say inflation stabilizes at 6.5%, the minimum we need to be is probably 8 to 9%, potentially over 10%. And this is on the Fed funds, okay? So we're not going to go there. They're not going to do any of these things. And if the market does have a positive reaction, I mean, they're already reacting in a positive, if you want to call that. We're trading below the lows right now. 37.75 on the futures right now is below the lows of 38.08 that a lot of folks thought was the low. So even now we traded down to 37.08 on the futures yesterday. I've been talking about some of these downward projections. We're starting to see a little bit of stability here. So the classic has been when the VIX is over 31, which it is right now, to buy the market. You sell under 20 or less. You sell. That trade just happened. We just watched that trade happen again. So we'll see how all this plays out. As far as what I said, we're here to watch the market's reaction and just discuss some things. I'll interact with you folks today. I'm going to be around to the close. We'll hang out to the close. We'll see what kind of things we come up with as the day goes on and what types of things happen. But I think what we're going to see is plenty of volatility, which ought to be fun. I talk a lot about what time are we getting to be. We're only at 15 minutes away. So I want to, I need to get my cue here for, I'm just trying to get my video stream here ready to go. It's really not doing what it needs to be doing here. Not sure why I can't get live. I'm hitting everything. Bear with me 1 second, okay, folks? I want to make sure this is all queued up, and it's not. So I am going to stop this stream and I'm going to restart it. So bear with me. I'm sorry. I had this all set up. It's just classic that when you get ready to go live that something's not going to work the way it's supposed to. That seems to be the way it goes. Anyway, I think that Powell's just going to be the same mealing mouth, just blah, blah, blah. They have to try to actually talk about the, okay, hang on. I've got this working now. Just making sure that we are.
These are all signs of financial tightening already, and so if you throw on top of that, an acceleration of the shrinkage of the balance sheet, you can have a lot of.
All right, I got everything working. Let me mute this out. Bear with me. Okay. Okay, folks, sorry about that interruption. As far as everything sets up, I think there was an interesting thing. I was kind of going crazy on Twitter last night around midnight, West Coast time. And what we're really looking at right now is the ECB is having emergency meetings. They're trying to basically jawbone and offset by having an emergency meeting. You have to understand they said they're going to do certain things, but this is the point. Is a lot of all you're going to hear is a lot of talk trying to convince the market that everything's okay. And I think in the end, it's not going to be okay. And there's still a lot of stress. Whether we bounce from here, like I said last night in the video, even if we went back to 4,000, it really doesn't matter. These issues are persistent. Inflation will be persistent. Oil prices aren't going to go away. I mean, O'Leary was actually, there's a couple things here. O'Leary was going, well, all Biden has to do is open up all Anwar and goes through all this stuff and oil prices to be at 100 or lower. Well, sure, that's all he has to do. And they know that, but they're not going to do that. That's the sad part of it. There's a lot of fixes out there that aren't that difficult. And then some other guy was on there telling how manufacturing is coming back to the U.S. and we're going to be self-sustained and that's going to happen in the next couple of years and all these earnings are going to come out. Maybe there's some relevance, but it was almost like he thought Trump was still president. Biden's about to potentially take off all the tariffs that Trump put on. So he's going to open the spigot back up full to China. So that's not, so all of these things that people are talking about that would be bullish aren't going to happen. And what they have to do, this is an interesting thing, and I talk about this all the time, is this is just jawboning, trying to convince the markets, you and me, that everything's okay and that they're under control. So we'll see what kind of statements we get. Markets rallied up. They're softening just a little bit here, about 12 minutes away. And what I'm going to do today, folks, since I know some of you out there are actually watching you'll be watching Jay Powell. If you hear him say anything that's significant, if you just put something in the chat line, I'll bring it up and we'll listen and then react to that as the presentation comes off. And this would be probably half past the hour. I'm going to set up a couple things that I just want to talk about. There's a trade that I always talk about, especially on a day like today, where you get the big spike. The initial spike, usually you get a reaction. There's a 2-minute trade. When it spikes up, you let it spike, you sell it, or if it goes down, you buy it, and then as soon as it rebounds, you sell it. It's literally 1 to 2 minute trade. Sometimes it'll last 5 minutes, and that's a trade we always did on the trading floor. That's an automatic trade, and it's a quick scalp. So be careful if you try that. I'm going to bring up a screen here. And I just want you to see something on the left-hand side of the screen. Let me go full screen so you can see this. On the left-hand side is the 5 minute. It's starting to sell off. What's interesting is these are some of the indicators that I released to the community. But you see the green lines above are the price projections up and down. So we have both sides of the projections are evident right now. This doesn't happen. You can look back. Sometimes it'll happen from time to time, but we have these big, broad ranges that are being projected here, all the way down. This number down here, 37.30, these are the numbers, 52, 39, 30 on the downside, 80, 37, 85, 94, and 37, 99 on the upside. This is off a 5 minute chart. And what I've got on here is 10, 21, 40, and the 200-day moving average. That's what's on the screen right now. And you see they're selling off the 1 minute on the right-hand side right now. There's no current Fibonacci's. PPMs have rolled over, so this is the protection being taken out 10 minutes ahead of time. We'll see what happens here. But I think folks are getting a little nervous squaring up some trades right here. But this is something I just want you to, I'll keep this up on the screen so you can see what's going on. But selling off the S&P and pretty good. And somebody was talking about a pop of a beer. It was Runa. And since I'm on a green screen right now, it's an invisible Runa. So cheers, everybody. So I think what we'll do is we'll listen to the statement. We're 10 minutes out and see what kind of reaction we get. I'll come back on. We'll listen. We'll wait for Powell to come up. But you folks will be my ears. So if there's something significant happening, markets start to move, let me know, and I can take and spin. I can play anything. I've got it so it's being recorded, so that won't be a problem. But anyway, something else this is the other thing while we're just doing a quick review. I have the hourly chart of the Japanese yen. Now, they came in last night. The last 2 days they've been coming in. They've managed to get the Dow yen down right now. I think we're net on the day. Let me go daily here so I can get that. Daily, we're down 0.82, so they've got it coming back in a little bit. There's some. We're starting to probably stabilize right here around 130. I'm going to say 132, 135 is going to be where this market is going to stabilize. They need this to happen. Can they get it to really decline a lot? I don't think so, as I think the scenario that's out there with higher interest rates, we probably short-term peaked all this stuff, okay? So that's to be expected when you get this kind of run. But overall, these longer-term trends, you start to go, I'm going to click over to a weekly trend here. These trends become more and more robust as you get more into it. Now, we do have an argument for 5 waves up in the Dow or yen. Maybe we get some correction, but this is going to be short-lived, I think. We're going to see another round of this. So we're going to get some consolidation here, and I'll set up some of the pattern. Yeah, Powell comes up at 2:30. That's exactly. So anyway, we'll hang out here. I'm just looking at some of your comments while we're getting ready. Yeah, I believe Chris Powell is in bed with the globalist, WEF, all these guys. In some way, I think they want to crash the market. You have to remember, I've been around every Fed chair as a market participant, even being new in 1979, going back to Paul Volcker and Greenspan, Helicopter Ben, Grandma Yellen, and now Powell the Joker. I'm not sure. I appreciate a lot of comments. I was going to try to compile a bunch of the names of that you folks came up, nicknames for Jay Powell. Some of them were pretty good. I really enjoyed that. So let's, so we're looking at the Dow or yen, and like I said, I'm going to go back to the 1 hour chart, and we're actually getting some downward Fibonacci levels here. Let me just expand this so you can see this a bit. So this is the Fibonacci projection tool. It's getting some lower projections down to 133.5. This is on an hourly chart. I don't think we get below this 200 period moving average on the hourly, but it does look like there's some more downside here. So the intervention is short-term working, and when you look at, if you look at just the yen, I can bring that up, I believe, by going back over to TradeStation here. You get a better feel for the magnitude of this decline. You start to see that how it has declined sharply here. But we are starting, like I said, there's an argument for 5 waves down, And let me just expand this out, and I'll show you exactly what I'm talking about. Still got about 5 minutes, so we'll get focused on everything that's going on here that's about to go on. So let me draw this in. This is awesome. My tool I draw in, it will not come up. Probably the only way to get that to come up is to restart it. It won't even come up. It's classic. So anyway, what we're looking at is this. This is the final wave down. Let's get focused in on the 10-year here. Let me get the scaling so it looks a little better here. So you can see we did get that RTX sell signal. We managed to spike up. Now we're into the sideways range. I talk about these box formations on the market grid. So we should go sideways for a few days. PPMs are backing off. Everything's backing off. This is the other thing. Yield curve has steepened just a little bit, but we're still negative. We're flat on the 1030s, and on the 530s, we're still negative by 8.5. So this is going to be really critical. All right, folks, we're just about 3 minutes out. We're going to go to level 2 setup. I'm going to put this stuff up. I just want to make sure you folks can hear the sound. Let me know that you're hearing this, okay?
Of being an investor. And yes, we are down 20%, but what we'd say is the good news is the market seemed to have discounted a lot of economic pessimism here. If we do look forward, we think we're later stage in this economic cycle. But if we do get a downturn, we don't expect it to be a prolonged or deep one by any means. And so the upside downside from these levels should give you a little bit of comfort. So yes, painful time, but keep in mind you've had a good run. And perhaps you're starting to think about coming out the other side here.
All right, well, that's helpful. That's positive, Mona, and let us put you on the...
So this dialogue that she was just talking about is exactly what everybody says. We might get a recession. It's going to be... You know, it's going to be short, no big deal. Meanwhile, they've got to get rid of this QT, and we got inflation. There's so much to do here. It's going to be the opposite of what you're hearing. It's going to be elongated. Those of you, if you're not aware of this, everybody, when they talk about depressions and long declines and things of that sort, they always think about 1929. You need to study 1873, the collapse of 1873. It was a 20-year, basically, depression. It was the collapse of the railroads, or a lot of stuff that went on there. But this is exactly where we are right now. There was an exuberance. I know there's not a lot of comparison. Today, they can push a button and add money, but you can't add money in this market. I think that if you get dovish here, then the inflation, it may be a bounce, but ultimately the scenario changes a lot here from that standpoint. So, let's, yeah, look, we're already getting a reaction here. I want to try to get this over here so we can see, but look at this big reaction. We just went from 65 to 93. Look at this move. Am I not real time on this? Here we go. Yeah, it's out.
Reserve Open Market Committee raising the funds rate by 75 basis points to a new target range of 1.5 to 1.75%. First time they've done a 75 basis point rate increase since 1994. It plans to continue its plans to reduce the balance sheet as laid out.
There was that reaction. We're already getting the selling.
Additional increases in the funds rate. To wit, the new forecasts from the Federal Market Committee show that they see the rate outlook for 2022 at 3.4%. That's up from 1.9. Pretty much meets where the market is. For 2023, it's boosted its own rate outlook, the median official, to 3.8% from 2.8%. That's a full percentage point increase. And again, pretty much meets where the market was at. Maybe
you see that reaction, folks? You got the spike up, you sell, you're already buying back in.
Increases in the outlook, the near-term outlook for sure, of the funds rate that we have since we've been publishing this thing since 2011. The Fed repeating that inflation remains.
Printing 99, now we're printing 60.
Pressure on inflation, says the China COVID situation, the lockdowns there are worsening supply chain problems. Economic activity, it points out, picked up in the second quarter from weakness in the first, obviously. It cut, however, its 2022 and 2023 growth forecast pretty sharply for 2022 by 1.1 percentage points, boosting the unemployment rate a bit for this year, 3.7%. But when you go out, they've raised it by 0.5 point in 2024. Boosted its core inflation outlook just a bit to 4.3% for this year, but otherwise sees core inflation declining to around its target of 2.3% in 2024. Finally, this was unanimous except for the fact that Esther George, the Kansas City Fed president, dissented, wanting a 50 basis point increase, which is interesting in and of itself. But there you go, guys, a 75 basis point rate increase, and the Fed saying it anticipates additional increases in the funds rate will be appropriate. Back to you.
Steve, stick market pretty much taking this in.
Okay, folks, how ridiculous is that? They're going to be back to 2.3 inflation in 2024. 2023, they're just looking at a 4% yield. That I'm sorry, but this is laughable. There's no way that is going to work. And so you already see what I'm talking about starting to show up on the screen here. We're starting to see a bit of it. Let's see what Santelli says. Sometimes he says some intelligent stuff. Hang on.
Myself, that the shorter maturities might be a little ahead of the game, considering that we have to do this on a meeting-to-meeting basis. That's why things like 3-month bills or 6-month bills compared to 2-year note yields are so interesting to watch. The issue I see is clear, is that the Fed has a favorite inflation gauge, the personal consumption expenditure core deflator. It's up 4.9%. And everybody watching has a different form of inflation gauge they prefer. It's called the AAA National Average Gas Price, which today is $5.01. Therein lies the problem. And Tyler talked about trying to get the reputation back. I can give you 5 numbers of why it's going to be difficult. 8.6 CPI, 18.9%. Export prices today, all-time record, down 20% in the S&P, down 30% in the Nasdaq, and University of Michigan at a 1978 low of 50.2. That pretty much summarizes the hurdles the Fed needs to overcome to get back into the popular graces.
And on top of that, and we turn Mike Santoli to you, the Fed is basically.
So yeah, Santelli pretty much locked it down there. This whole scenario that they're putting out there is ridiculous. You're already seeing the futures down at 50 now after printing 90, so it dropped 50 handles. So this is likely to continue. Wouldn't be surprised we print through the lows. Let me get this off the screen for right now. So you folks, when Powell comes up, you folks in my ears, those of you that are listening in, just come out on the timeline. Let me know that there's something up that maybe we should listen to. I would appreciate that so I can talk about some other things that are going on here. But yeah, so I see like a couple of you, dollar going up. Let's flash over to the yen. Yeah, look at the yen reversal here. Just on the hourly, just boom, outside reversal, big slam up. Let me make these bars so they're a little thicker here. 1 second here. Yeah, you look at that big reversal on the yen. Folks, that is not what the Japanese needed, okay? I've got this scale back. There are some fib targets that are starting to pop up, kind of random stuff, but we're still looking at probably 142 on the yen. Hey, Javier, that's awesome, man. That trade is so magic. You know, I'm sacrificing being here, but that's such an awesome trade. I used to remember back in the brick phones, Wall Street. I used to write into on BART coming into San Francisco to the Pacific Options Exchange, and I remember having that. I had a quote trek, which was a radio quote machine, and I would call the guys on the desk on the floor as I was coming into the city. This is like 5:20 in the morning on the train, okay? And I would put on it, there's a tunnel that used to not have any reception. I would go, right before I go in the tunnel, I would tell them to do the fade trade. Soon as the spike, do the fade. It took about a minute and a half to get through the tunnel. I had reception, call them back, and then exit the trade. That's how it became a 2-minute trade, by the way. So a little background on that whole scenario. So anyway, yeah, but so let's go back to the futures here and go back to level 2 just to see what's going on. Yeah, so they're probably going to stabilize in here. We're going to get what I call volatility spikes, and you're going to see, I'm going to make this chart full screen here. If you notice, there are places, this indicator down the bottom is just a volume rate of change on a 10 period. And when you get these spikes, you see the volume starts to spike, and you get these little, what I call volume volatility spikes. And those I talk a lot about what makes markets move. When you see a market move, the transaction volume goes through the roof, okay? So the amount of transaction does not have to be actual volume, but it usually equates to that. But the transaction volume goes up. So it's not like there's one order, but there's an accumulative order. And it doesn't matter if it's real estate or if it's markets. Transaction volume, that the more and more transactions and the faster they can occur causes prices to move up or down. And in the case of some markets, there is no down market. The sellers just disappear, and that lack of liquidity is evident. I'm going to bring this up and go full screen. But this is another element that's out there. Right now, there is 0.0 liquidity in this market. There are 2 and 3 and 5 contracts on the side. So you're seeing prices change by 300 and 400 points in a few clicks. I mean, the screen over here on the left, I'll click on this. This will cause it to center, but it's just flying off the screen. It just went from 46 to 53 in less than a minute. So when you see that there's just no liquidity, you have to be very careful trading in this kind of mess. We just traded up to around 59, it looks like, and now we're 54. We're 500 points lower on the S&P. So we're just seeing crazy, illiquid volatility. And these bars down here on the left-hand side of the screen, those are showing the bid-ask on every trade. So you can see how there's not much there. All of a sudden, you'll see maybe a big offer bid will come in, and there'll be one bar floating across the screen on the bid or the ask. It's very interesting. So what we're setting up here right now, look at this, all the way back to 49. We just 10 handled it, just like that. And then in fact, yeah, all the way to 45 now. So we did 15 handles, which is 1,500 points in a few minutes. Now we're back to 44. So it's very difficult. If you're trading small, you might get filled, but you have to shoot above. You can't shoot at the market. You have to try to play this range. Right now, I would guess that we're we're probably 42 bid at 47 because at 200, there it goes right up to 47. So what we're seeing here right now is that lack of liquidity, and a couple hundred contract orders is going to move this thing 4 or 5, maybe 600 points if they come in. So that's why you're going, like right now it's probably 42, 47 market. So it's probably, I'm going to call it 5 wide. Just flew off the charts again. All of a sudden we're 53. So these markets are 4 and 5 handles wide. And what that means is where you're going to settle down at the bottom, where you're filling these orders, are down at, let's say right now, look, we're at 50, 53. We're probably, I'm going to call it 48, 53, like a 4 or 5 handle market. No way you can trade this stuff. So be very, very careful here. Okay, I'm just looking at some of the comments you guys have. Yeah, let's take a look at that, Vincent. Vincent just commenting that the 5-minute projection hit smack on. So let's stay on the screen for a few minutes, and let me change the. Right now we're getting 1 minute. Yeah, let's do a little bit. This is a lot of what we're setting up in the live trading room. And those of you that are part of the live trading room, thank you for being so flexible, because I really feel like on moments like this, the entire community, whether you paid or not, we should be inclusive. There's no way that I can facilitate everything I'm doing. So this is the best way to do it here. Yeah, so what we're getting right now is the 1 minute is getting targets of 79, 94, 803. Let's see, is that the right number here? Yeah. So we've got these upward targets here. You see these dots coming in. These are real-time indicators. This is the indicators, the links right here that you can get. I'm just watching. I'm watching the badges coming up on the phone. Let me move this over here so I don't have to look around and just see what's coming out. But yeah, so what we're going to get is real time on here. There's something else I have here is what we call the Wavetech webs. Now, these aren't necessarily a proprietary indicator. What they are linear regressions, and there's 20 of them. I just made an indicator so you didn't have to sit there and put 20 indicators on every time. But the analysis, what we're getting here right now is potentially a diamond bottom on the 1 minute, which tells us we'll probably trade into these moving averages back up around 70, 72, 71, 72. So yeah, we'll just hang out for another 15 minutes and see when Powell comes up. Maybe we'll listen to his opening statement. It's pretty boring, but we'll do that. So you're seeing this set up here. That's something else on the screen right here. There's some red dots across the string. That is the pivot. 3782 is the pivot. We get above that, then we're going to probably retest this spike high here. And on the 5 minute, I also have the pattern finder. I need to put something on here, folks. Just bear with me a second here. On the fib ratio 4, I programmed in when we did some stuff that we didn't do in TradeStation when we programmed these indicators, but I'm going to show you the pivot points, and you'll see these arrows here. They're on the 1 minute, and what they are is showing where the marked highs. There's an algorithm in here that's marking every high and low. You can draw lines to it, and in this case, you can use on a number of indicators. So what we're setting up here on the 1 is we're probably coming back into this webbing here, and then we're looking at a potential for this thing. Yeah, so Brian, yes, those outside reversal bars on smaller time frames also work just like that 3-day or be a 3-bar, 5-bar trade that I talk about all the time. That's on the channel. I think you can find it by going to how to short Apple. It was a video I did last year on a big reversal. So that happened. So we traded back into the webs here, and PPM, these are PPM 1, 2, and 3 here. Let me go full screen so you can see it better. These are PPM 1, 2, and 3. You see the 1 minute, PPM 1 on the 1 minute is turning up, which tells us we're likely to continue up towards some of these higher numbers. Now, the min number here is 37.79. So right now we're trading 63.75. So we'll see what sets up here. The 10-period moving average is rising above here. I'll show you this setup pattern, and when Powell comes up, we'll bring that up. Yeah, we'll Chi-Town Tony. We'll try to go through some of that stuff as we're going through there. Yeah. So for instance, on the right now we've got on this bar where I have the cursor on the 1 minute, we got a PPM cross 1 and 2. That was your buy point, and what you wait for is a PP. You can do the trade there. We just got a 1 minute update. PPM 2 just crossed over its second derivative. So now we're going to challenge this pivot at 82, probably going to print 93, probably going to go back to the 38 handle here is a very strong possibility. You can see the 5 minutes getting a big reversal. We're above all that. Look at the PPMs over here. So we'll continue to watch this. But so the buy point from the webs was down in this webbing. This is where you're buying. And now what you're doing is you're probably looking to sell into these fib targets from a day trading standpoint. You don't want to get too bullish and start thinking about when you're day trading, you're day trading. So you're basically looking at short-term swing trades, especially on this setup, a 1 and 5 minute. That's exactly what you want. So we'll see what sets up here. We've got some positive. We're still not getting great acceleration on PPM 2 and 3 on the 1, but it's still looking pretty good. We look over at the 5 on the left-hand side. We're seeing this thing really ready to break through first and second derivative on the 5. That's going to set up. We don't have any upward fib targets, nothing on the 5 minute, just on the 1 right now. So we're depending on that to get above there. Whether we can hold above these averages, the 10 period right now support on this pattern right now is around, we're going to call it around 69 to 64 support on this. I think we're going to challenge this pivot. We get above 82, we should do a moonshot up to at least this 94. And probably everyone's looking. Hey, listen, remember this, folks. Remember this. We're all watching the same movie. Okay? So the fact that I'm talking about it, anybody that's trading actively right now is seeing the same thing. So this 1 minute's trying to set up. We're seeing PPM 1 start to back off a little bit. What I'm watching now is confirmation on a 5 minute. So if I've got a good, let's say I got a good position down here at 54, 56, I got long in there. Then what I'm looking now is confirmation off the 5. We may not get it. This may just be noise, and the trade might have been 54 to that. What was the high we got to here? We got to 77. That's a great day trade. You grab 13 handles out of this thing. It's really good. I don't have the market grid up here, but we could add that in. If I flip over to the TradeStation view of this, I do have the market grid up here along with the webs. Okay, so we're seeing similar type viewpoint. The difference here is I've got level 2, and normally when I'm trading, I'm watching the order book as much as anything and time and sales. And I'll just stay here for a minute so you folks can see this. Let me go full screen. So what we're looking for, we're seeing some algo buying coming. Here's 71. They're ready to print this thing higher. Okay, this thing wants to run. I think we're going to see that 82 challenged up here in a minute. But this is actually setting here. Everything's starting to look pretty good, but watching the order book, that's why we're watching this liquidity. There's still no liquidity out there. Let's go back to the other screen here. And so you can see this just a little bit more. There is a little Fibonacci number right here at, let me get this number. Yeah, so it looks to me we're setting this 1 minute up to challenge 82, and above 82 you're gonna roll this market quite a bit. Where are we at? 9 more minutes. So Shaito Tony, just looking at some of your comments, you want to use all these tools in combination with everyone. For day trading, the 1 and 5 setup is good. What we're doing is taking the 1 minute chart and breaking down the 5 minute patterns into 1 minute increments. And if you've been in on any of the live rooms, what we're looking at is confirmation. Like right now, we're only 1 minute into the new 5 minute bar. It's turning negative now. So we're starting to stall here. PPM 2 on the 1 minute is looking interesting, but we're going to get an update here. Let me just give you a time in 45 seconds away yet for this next update. So they're seeing some selling coming in. You're getting a reversal. You basically fell just short of that fib target 1. Fib target 1 was, let me get that up here. Fib target 1 was 79. We printed 77 even. So we fell just short. Now we're coming back in. This is awesome. Okay, we're going to keep going. I'm going to show you guys some patterns here. You know, the indicator, these indicators are awesome once you learn how to do this. And there are some videos out on the channel. And oh, I forgot, my drawing tool won't work. And I'm not very good with this pattern. Hang on a second here. I think I might have figured something out. I did. I managed to get it working. So this is the pattern. This is one of the setup patterns that we talk about in the live room all the time. This is the pattern right here. So what we're looking at, this is wave 1. I talk about the 1-3 setup. This is the next setup here where we're looking for the pattern to be set up here. We should set up some kind of low here, and we get so we're trying, if you're trading this pattern, you want to buy into this low here. The 5 minutes really not lending a great position here to come in on this trade. So we may see when I do this tool, it freezes the screen, so nothing's happening. So let me take that off and see what kind of action we're getting. Yeah, so it's just breaking down here, and that's what the 5 minutes telling us. This is not a classic setup for the 1-2. We're getting a little too deep in this pattern. So we want to see the setup here for the markets go on. So I'm going to show you the alternative setup here. Okay. So I figured out how to get this thing to work. So here's the alternative. There's a couple things. Red triangle. This is 1. This is 2. So what this would project is the opposite, where we're going to get a move down. And maybe on this right-hand side here, maybe we're looking at 37, 30, 39. There's some Fibonacci targets over here off the 5. Look at the PPMs over here on the 5. They're all failing. They're negative, pretty substantial negative right now. So this may be the next setup. We're already partially into that. So you have to, when I was looking at this, I recognized that the 5 minute is not a classic setup. So let me just take that off for now. And we'll see what kind of pattern we set up. Maybe we're getting the deep pattern. PPMs are turning up already. So if you're looking for this, you could go in and take a position in here with a stop down below this 49.50. You have to be really quick, especially in the lack of liquidity. But we're going to have to confirm this trade. You got to get back over 67. So we're looking at this pattern setting up. What time we got, folks? 4 more minutes. So we'll stay on this. Yeah, and the ABC down is exactly, Jeff, what I'm talking about here. Yeah, so Jeff has been a member of our group for a while. That's exactly, this is the ABC I was just showing you up at right now. PPMs are really negative on the 5. So it may just be a noisy pattern. I'm going to draw in one more pattern here just because what we end up sometimes is this, especially in a range like this, when you see these kind of patterns on the 5, they're very unorthodox, just noisy, like big swings back and forth. Sometimes what you'll set up here is like literally a range like this. Maybe you make a new low, but you end up getting zigzags in this range. So if you're a day trader, you can try to play these swings, but these are the kind of patterns that you just set up. And they're frustrating because you end up buying and then they fail and it's set up. This 5-minute is very unorthodox on the left-hand side from the standpoint of what's going on here. But see, we're stabilizing here, so we're getting into most likely a noisy pattern. Let's go up here and let me add in. I'll go to the indicators. These are the ones that you can have. And let's go into the market grid. Let's put market grid on the screen. And so now we have market grid running on the 1 minute. So you can see exactly what's going on with market grid. We have a big pivot down here, by the way, 714, 37.14. So this is a really messy pattern. So we'll watch this. We got about a minute or so. But anyway, we'll come back to this. All right, let's take a listen real quick, folks.
The total number with food and energy, but the Fed should not be distracted by that, and they should say we're going to continue to press until we start to see inflation ease off. That's what Chair Powell has said for all along, and just stay with that program.
Does he need to spell out explicitly what progress is and looks like? I mean, he said he wants clear, I think, in convincing evidence that inflation is falling. Mester, I believe, told us that for
Okay, folks, we'll wait till Powell comes up. But this guy's right, just basically what he's saying. They need to keep it going. They really do. Yeah, I think I had the other mic on. It should have got better, Francis. Yeah, so we'll wait till Powell comes up here and just see what his opening statement is. Boring it's going to be. Hey, listen, the Fed probably since Bernanke has been politicized. More so now, for sure. See, we're trying to stabilize on the 1 minute here, but it's just noise right now. There's no emerging trends coming out of this thing at all. So we'll go. Well, I have to tell you, I'm super excited. I think I'm going to do an unpackaging. I have a brand new computer getting here tomorrow. that was built by Digital Tigers, which you can get a discount. You go to digitaltigers.com and do Kindle 5. They will give you a discount. But they just built me a monster trading machine. Yeah, I can't wait to get it. I got two 55-inch curved HD monitors that are going to be split into 8 pieces. So I'm excited. Next week I get some crazy stuff. Here we go.
To bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2.5 years and have proved resilient.
I know, he seems nervous to me.
Bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight, and inflation is much too high. Against this backdrop, today the Federal Open Market Committee raised its policy interest rate by 0.75 percentage point and anticipates that ongoing increases in that rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. Overall economic activity edged down in the first quarter as unusually sharp.
Just hit fib target 1 on the 1 minute.
More than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong. In contrast, growth in business fixed investment appears to be slowing, and activity in the housing sector looks to be softening, in part reflecting higher mortgage rates. The tightening in financial conditions that we've seen in recent months should continue to temper growth and help bring demand into better balance with supply. As shown in our summary of economic projections, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth running below 2% through 2024. The labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies at historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 408,000 jobs per month, down from the average pace seen earlier in the year.
Fib target 2 hit.
Still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. FOMC participants expect supply and demand conditions in the labor market to come into better balance, easing the upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises somewhat over the next few years, moving from 3.7% at the end of this year to 4.1% in 2024, levels that are noticeably above the March projections. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in April, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core prices rose 4.9%. In May, the 12-month change in the Consumer Price Index came in above expectations at 8.6%, and the change in the core CPI was 6%. Aggregate demand is strong. Supply constraints have been larger and long-lasting than anticipated, and price pressures have spread to a broad range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and food.
There it is.
And is creating additional upward pressure on inflation.
It's Russia's fault.
And COVID-related lockdowns in China are likely to exacerbate supply chain disruptions. FOMC participants have revised up their projections for inflation this year, particularly for total PCE inflation, given developments in food and energy prices. The median projection is 5.2% this year and falls to 2.6% next year and 2.2% in 2024. Participants continue to see risks to inflation as weighted to the upside. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, resulting in a 1.5 percentage point increase in the target range so far this year. The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Coming out of our last meeting in May, there was a broad sense on the committee that a 0.5 percentage point increase in the target range should be considered at this meeting if economic and financial conditions evolved in line with expectations. We also stated that we were highly attentive to inflation risks and that we would be nimble in responding to incoming data and the evolving outlook. Since then, inflation has again surprised to the upside. Some indicators of inflation expectations have risen, and projections for inflation this year have been revised up notably. In response to these developments, the committee decided that a larger increase in the target range was warranted at today's meeting. This continues our approach of expeditiously moving our policy rate up to more normal levels, and it will help ensure that longer-term inflation expectations remain well anchored at 2%. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 3.4% at the end of this year, a percentage point and a half higher than projected in March, and 0.9 percentage point above the median estimate of its longer run value. The median projection rises further to 3.8% at the end of next year and declines to 3.4% in 2024, still above the median longer run value. Of course, these projections do not represent a committee plan or decision, and no one knows with any certainty where the economy will be a year or more from now. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. Clearly, today's 75 basis point increase is an unusually large one, and I do not expect moves of this size to be common. From the perspective of today, either a 50
There it
basis
was
point
there.
or 75 basis point increase seems
Look at the
most
market
likely
rally.
at our next meeting. We will, however, make our decisions meeting by meeting, and will continue to communicate our thinking as clearly as we can. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be
There it is.
in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look
How do we keep that appropriate for children after those comments, right? Folks, these folks have no clue. These projections for inflation going forward are a joke. Just like transitory, any terms like we're looking at soft landing. That's your new transitory. And, you know, markets are buying into this. You see this spike. I'm going to take this off. Let me get that off the screen. Look at the PPMs on the 5-minute. They actually rocketed up on that reversal bar, and they're continuing. Here we are at 37.92. We're going to test that spike high now, and we're going to go straight up. And this pattern that's on the 5-minute chart right now is about as unorthodox as they come. It's absolute volatility noise. There's nothing to be from this. And I have to change the scale because it's going off the top here. Let me just move this down just a little bit. There we are. We've already taken out the spike high off of the news, and it's ballistic now. He said a couple things. He said this is not. He said we did it 75, but this is not going to be usual. So he just signaled to the market that 0.5 is coming. Is that a pivot? I don't think so. Like I've said before, the fact that we get some sort of rally here doesn't really change what has to happen going forward. I suspect this rally is probably, there's a couple of numbers out there night before last, right around we got up to 38.08. That's a key number on the futures. Let's bring up let's go back and take a look at TradeStation viewpoint here and just talk a little bit. Here we are, new highs on the session. Just look at this, 12, 13, 14. Before I could even bring it up and show you, they've already printed. They're in a huge run here, okay? This is a huge run. We printed a 14 back to 09. So this is a typical, yes, you sell the rip, you got to make sure the rip is finished. There's no liquidity here. So just a few hundred, there's literally 1 and 2 contracts on a bid or an offer right now. So we just went all the way back to 04. This is exactly what was expected. So remember, I was showing this screen here just a little bit ago, and I want to show you a couple things that set up while we were watching that gibberish, right? See this volatility down here on where my cursor is down below here. That volatility spike, this is started right after the announcement coming into these. We're getting this volatility. You start to see these numbers come back in, and they won't have as much impact. They'll start to contract, and then at that stage, you can actually see even an uptrend or a downtrend happen intraday in these markets. So yeah, so look, we're right back up at 12. Let me go back to the level 2 so we can watch this trade. Yeah, so 1550, that's a new high. They're not. Let me fix this chart here. They're not. They're probably not done here. We're going to set up some kind of pattern up here. There's going to be some consolidation. There's still a bit of a run. Here we are right at new highs. So they're running this thing yet. So do not get in the way of this at the moment, and let it run its piece. And what we'll start to see over here on the 1 minute, let me go full screen. What we'll see up here is we'll start to see what we call webbing and crossovers here. And that's when you'll start to see a sign. For the moment, you do nothing. You let this thing run unless you happen to catch that bottom, and then you're still watching, just letting it go. So we printed 20 on a high, back to 13. But I'm telling you, there's no liquidity, so there's very few amount of contracts moving that. If you added up all the order book that you see right now, you don't even get to 100 contracts. Here we go, right back to the highs again. So we printed 25, just like that. We went 13, 25, back to 20. So this is not to get in the middle of this particular type thing. So they're still printing them up. Just made about to make a new high. Here we go. We don't have any crossovers on the 1, so this thing is still on a run. We start to get some webbing, you'll see that come into play here. But we're a few minutes away from this run being over. Vertical move. You kind of knew that was going to happen. There's a new high, another new high, 26 prints. We're starting to get some minor crossovers on the 1. There we go. Now we're getting the crosses. Yeah, so we printed 26. We're already 10 handles, 12 handles off that high. We're getting a reversal on the 5. There's a good chance that that was your run there. There's what we want to watch for here is this 1 minute. Let's go over to Trading View and take a look at that. Let me change the scale just a little bit so we can get a better feel for this pattern. We're starting to see crossovers. We're down. I've got the market grid, so we just traded STX on the market grid. Let me fix this right here. Yeah, this 5-minute chart is pretty tough to read. It's just noise. But this 1 minute is rolling over here. So we're now at 18, 16. So we printed 26 high, and we're printing just about an S3 on the market grid right now. There's S3 mark on the 1 minute. So what we're looking at here from the standpoint of this pattern, we've got these vertical moving averages. So we're probably going to hold right around this level 07. This one goes back to the 07, 08 highs that we printed a couple of nights ago. Definitely going to should see a bigger pattern set up. And one of the patterns that we watch for in these webs is, and we're starting to see all the crossovers. We just took out the 10. We're trading S1 on the market grid right now, trying to get down to S2. But this, we get what I call a veil. I got a bunch of screwy names for these things, but this is a veil setup where we start to get a rounded top here. If we get that, we'll come back into the 200. This is a 1 minute, 200 minute, the average of the 200, probably back into retest the backside of 07, 08, something like that. And then we'll come back into these numbers here. And by the way, there was a pivot number down here. We were watching at 37.46 was the pivot. But you got the buy down here on the 1, you got the confirmation, all 3 ppms. Now you're getting the opposite. You're getting the sell signal come in on the ppms. So now you're seeing the webbing form here. Let me just broaden that out so you can see that just a little bit better. So we usually will trade back into the webbing, trade back to 22. There'll be what I call an echo bounce. And then from there, you can get a swing objective to possibly get this thing to roll over. There's still a possibility here to set up a bullish flag, and I'll just follow this. We'll do some of this for a minute. Yeah, Fred, you're right. The weekly PPMs, I talked about that last night, are starting to turn up. But that's no more than probably a little correction back into the 10-week, 21-week moving averages. Not even 21, just the 10. We'll take a look at some of that. So this should be a rally back. You got the top end of the market grid right here at 17. See if the market grid can turn up. Just kind of watch this for a few minutes. And then what we could get here is, let me draw this in. This try to get ahead of the patterns here just a little bit. what we get here is off of this, you got a pivot high right here. Then you get a move up, and then this, and we should come into these moving averages here would be the move. And then you can possibly set up some kind of pattern that could make new highs. We'll see if these guys get really crazy. So we're right now trading about 100 points off yesterday's low. But that's a potential pattern. You see the market grid turning up here, but we're getting this veil. My thoughts are we will get this rollover. That might have been the echo bounce right there. It doesn't look like much, but we got back up to 1675. We didn't make the 17, and now we're all the way back at 0405. So everything I just talked about just happened. If you look here, you'll see that there's some downside fib targets right now for 37.89, 74, 64 on the downside. But that puts us right into those moving averages I was just talking about there. Hey, George, I'll address your question here in a minute. So look at this, right down to those numbers. So you're always sold right in there. We're trading all the way down here. Here we are at 87, potential target of 64 on the downside. So big reversal, big spike. Look at this thing trade right into these numbers. Telling you folks, these things are magic. I've been using the fib targets, PPM since 1984, fib targets since 1992, and the web since 1993. So these are my staples. So we came right into this 10-period moving average. We still have a 0.6 move here, so we're going to get some stability in here. But there was a great scalp trade off there literally in 2 minutes. I don't know if you could get filled in this environment. Notice the market grid's turning down. The moving averages are kind of coming through here. So we'll see what happens. But I think we print down probably at least down to this 40 and probably 73 print is likely here. So we're trying to trade through that moving average. PPM's turning up on PPM too, so we may keep some stability here. But this is the basis of that pattern I was just showing you. Let me draw it in real quick so you can see it. This is the pattern, and that these fib targets that we're looking at here came off of that pattern. So the indicators are recognizing this in real time, giving you a heads up on where it likely go. You throw the market grid on top of this, and you get some pretty good examples. I'm actually going to go over to the 5-minute, and I'm going to throw in the market grid over there as well, just to see what kind of volatility spikes we're getting on this stuff. I got these fat bars so they're easy to see. But we traded up on that 5-minute. We only got to R1 on here. Look at this thing trading down. We're going to print down, I think, below at least to this 200, which is at 73, and then the possibility of going down. So there's 50 handles we just watched. Okay. We got a pivot right here at the high. You can see this triangle up here. That is exactly where this thing where the pivot was. And so now we're just kind of waiting for this other pattern here. Let me just take this 5-minute and just make these bars not as fat as they are. So we're trading almost up to R1 on the 5-minute. This is a new bar that just started. So we've got really on the 75, 73 should be a target here. Maybe this little reversal on the 1 was the low there at 80, but I think we try to print back down one more time. We'll see. I just saw a badge come up that Fauci just tested positive for COVID, and he's got 14 COVID shots. What a joke. So here we go. We should roll over. We've got market grid. We're trading S3 right now. We're trading STX just about here on the market grid on the 1 minute. PPMs are starting to fade here. I think we see at least 74 and the potential of 64 on this little rollover. And that would put us also over here on the 72 is S2 on the market grid on the 5, S3 is 62. So that's certainly in the possibility. We'll see what kind of if we get stability here. So this would be another pattern. So if we start to see upward crosses on the 1, I'm just going to do a training class here. So let me draw in one more thing here. So we have this potentially satisfied. Now we're getting maybe a mini up here. Maybe these all of the webs start to turn up a little bit, and we form a right shoulder here. Okay, so I'll draw that. I'm going to take that down so you can see this. Then what we look for here is another 1, 2, 3 potential. I think 38, 20, 26 was a ridiculous number to print. And that was just pure. That was done on air, folks. There was nothing behind that rally. Let me unfreeze this chart. Yeah, so we're coming down. Here we are now, still looking for the potential. Here's almost into S2 here. Just about got to S2. PPMs are rolling on the 1. We're still positive, pretty positive. Right where we just traded, we got to the 10-period moving average. It's up at 0.74. Anything just like always up over 0.25 is represents about only a 40% probability to take it out. So right now it tells us that we should bounce. Look, we got right down to that 200 that I was talking about, which is 74. Let's see here. It's listed over here as a 180, but it just, yeah, so we got down to 75.50. So we basically satisfied that pattern. Now we start to see maybe some turn up, and we set up a right shoulder here, and we'll find out if there's more declines as we come in. Yeah, Jason Bourne, I believe you are correct. So we're still under pressure here in general. We're not getting any bounces. The 10-period moving average. This is the pattern, folks. I'm telling you. The link is on top of the screen. Get these indicators. This is the pattern I talk about. This is the 10-period moving average. Let me do something here. I just want to, I'm going to take those off for a second. I want to put them back on because I've got better. This was an old chart setup that I have. Let me go to my scripts and put on there. Nice. Trading view. Okay, now this is better. I get the right colors. So red line is the 10. So we have potential of a declining pattern here. But I think what we're going to set up is a right shoulder, probably print somewhere around 14 or so. Looking at the market grid on the 5-minute, that is going to put us up there right around 13. So we're getting that rally. Look at this, right back in here. So we traded all the way down to 74, back to, what was the high here? This is crazy stuff here, folks. 05. So 30 handles. But I'm telling you, everything's being done on air. If I brought up the level 2, you would see that there is no liquidity. These things are being moved like this with nothing. So I would say, like I said, 13, 14, that may be the setup. We may just decline straight from here. That was the point where we printed up to 05. Could be one more high here, but then I'm going to try to keep drawing these patterns in so you folks can see this. Okay, so this was the pattern I was talking about. We got this 1, 2, we'll call it 3 here. Look at this. We got 2 pivots here. I gotta take this off and restart. Hang on. I want to change this scaling a little bit. I want you to notice that the pivots, this is what the software is marking all of this stuff here. Now let me show you here. This high right here was one pivot. This is the low pivot. So we could have another one of these where we get 1 and 3, and all of a sudden we're back at 37.80, something like that, where this thing fails again. I mean, did Powell give us that good of a reason to believe that the bottom is in and everything's going to be better? I don't think so. But you can see this would be a potential pattern. This number right here, this green line, and first we have a red line and green. Both of these are pivot numbers. Let me get rid of this so I can tell you what those are. The red pivot is 65, and the 45. If we took out 37.45, then we'll make a new low on the session, I believe. But there's another pattern that could set up here, a little mini pattern. I'm going to keep drawing stuff. This is kind of what we do in the live room. So we could get a little mini pattern here, sets up the right shoulder, and then you get this move. Look what we just got. I'm just pointing them out. Just got new downward projections on in a real-time calculation here off of the 1 minute. So now we're getting targets down where I'm talking about. So let me just clear this so it unfreeze the screen. We'll see if we can get there, but you can see these targets right here, 51, 29, and 18. So whether we get a move, we may get this move up. This pivot here is at 05. So if we stay below 05, then we should get this move down in to test these big pivots that are on the screen and all that. Look, we also got on the 5 minute over on the left hand side of the screen. We got the new move down, projected down right now. Let me get those exact numbers. $37.49, $37.19, $37.00 even. These are new projections just off the 5 and we do have a low and high pivot. So you can see now over on the 1 minute, we're getting this. So we'll do this a few more minutes, folks, and just continue to follow this. So the webs are starting to try to turn lower. We're very close to rolling over the 5 minute. We need to print an S2 on the 5, which is 73 to break it down. So right now we're 95. That seems like a long ways away, not in this kind of volatility. Like I said, we can still get a swing up and then still have some negative patterns setting up for the rest of the day. Yeah, the one nice thing about getting indicators and getting into the live room, it's completely closed circuit. We can talk about anything we need to talk about. So on YouTube here, we're kind of muted. Yeah, I don't know about 49.90 for 18 months from now. I guess anything's possible. So we're trying to trade up in this pattern. We're almost trading R2 on the 5. The webs on the 5 minute are trying to roll over. Yeah, this is Trading View that I'm on right now, Nicola. This is basically you can set up a split screen. Yeah, George, I don't see anything changing that 6 quarters down. Yeah, they're just grabbing, Rocky, they're just grabbing at straws here. We'll go over another screen here in a minute. We'll watch. I want to see how this pattern develops. We'll spend another 10 or so. One minute's trying to reverse down. See if we can hit some of these targets down below here. On a 1 minute, those targets right now are 51, 31, and 17. And they're on the 5 minute, we're looking at 50. I'm just round number 20, and taking out the 37 handle. Yeah, we'll just spend a few more minutes on this intraday stuff. Yeah, Kindle 5. Like I said, I may do an unboxing of this new computer. I got the i9, an insane amount of memory and a bunch of other stuff. So it's meant the Digital Tiger guys. By the way, if you use TradeStation will credit you back, depending on your trading, up to 100% of the purchase of the computer. So if you're an active trader and you want to switch over to TradeStation, you can get all the money back. So sideways here. So still kind of struggling here. Here's the Digital Tigers website. Kindle 5 gets you a discount. These guys build trading machines, crazy. The only computer I've used for the last, actually a decade now. These guys have built all of my computers. They're pretty amazing. And they're just, yeah, they're insane. That's all I can tell you. They last forever. I always tell Jeff, stop making such good computers. I'd buy one more often. But so we're getting a little upward slope here on the 10, on the 5. So PPM's turning up. No new upper end calculations. We're really just kind of, this is the most stable the market's been. Let's go over to TradeStation just for a minute here, because I want to see if we're starting to pick up any liquidity here on the, not really. So you can see here, this is a potential rolling top on here. We're starting to, let me move this chart over here just a little bit. This is a little more defined on this. This is one of those veil tops I was talking about. Now what we're getting is basically in a pretty vulnerable state here. If we take out the low here, 37.83, we're trading 88. We take that out, we're going to roll over on this market. Let's go back to the other page here. Yeah, so we're very close to a trigger on rolling this thing over. Yeah, Pedro, all this, I mean, it's pretty amazing stuff here with the Tigers. Yeah, just tell Jeff I sent you and go for it. So here we are. We're starting to trade down here. Almost ready to break some of these numbers here. They're trying to hold right here at the 200 is holding on the 1 minute. It's amazing that works, but that's at 76. So we're kind of holding support at the moment. PPM 1 over here on the 5 is at a 0.95. So it's got a lot of potential holding power. We traded down to STX. So it's going to take another, what time is it? Well, let's do this until 12:30 and then I'll come back up and we'll talk about some other stuff. I just put that in the timeline here. So digitaltigers.com and discount code. You have 5% off. Kindle 5. Yeah, and so here we go. We got an update on the 5. Last defense here is right around S2 on the 5 minute here, 77. So we're still looking at breaking through this 200. The downside calculation on the 1 stopped calculating, but we're still got a valid projection on the downside on the 5 minute. You're probably right, Jason Bourne. Yeah, so still holding these support levels. This is, like I said, at least from, we look at the 1 minute, we've been in this sideways range now for the last 15, 20 minutes. So we're just stable here. A little bit of a bounce off of S2 on the 5 minute. That PPM 1 is what's really boosting this thing. And if you use these indicators, right now we're at a 1.04. You have to move the decimal one place to the right. So we still may have that print up here, 14. You got two high pivots here, you got one low. See what kind of pattern breaks out of this. You see over here in the 5 that it's trading right on the 10 period moving average, which is right now right at 37.90. Let me get that number exactly, 88.85. So we're trying to print just under it. Probably another, what time is it? Another 10 minutes, 2 more bars. We'll get that going. Right now we are about 2.5 minutes away from that. Yeah, we haven't taken a snapshot of the yen for a while. Let's just take a quick look at that. Yeah, look, it reversed back down now. So now we're down on the 200. So now printing 133.80, coming down towards these lower Fibonacci targets that I was talking about earlier. This is an hourly graph. So we're sitting right on support here. So this is important, at least for some stability for a few days. We just got, while I was looking over there, we got 2 minutes ago, we got upward projections here now for a fib target 1, 38.12, 24, and 31, which would be a new high. So this fib target 2 is actually would suggest a retest of the high. I don't know if we're going to get this thing. The PPM 3 is rolled over pretty good. I think we're still going to stay under pressure here. And I'm thinking that for 37.49, the low that we got to was just trying to get this low 30.23-ish on the downside. So this thing, I always say a market that should rally and doesn't rally is a dangerous market, and that's what we had come. If you recall, right before I went out of town, I was talking about a 3 to 5 day rally, and we had to get over 42.15. We printed 42.07 or something one day, and then we couldn't get over 41.50. So here we are, trading in the 37 handle now. So still kind of sideways. No. We're traded below the 10. We traded almost down to S2 on the 5. We're back positive on the 5 minute. We are in the final minute of this update here, folks. We have 6 seconds to go. 3, 2, 1. There you go. We get an update. There's the update. So we get these upward targets, like I said, right here at 12, next target 25, basically a retest of the highs. If we can move, PPMs are trying to turn up on 1 and 2. PPM, look at the 5 minute, look at the acceleration in PPM 1. So that 10 period moving average is right where we're at, approximately where we're trading right now. So when you look at the market grid, S1 is likely to hold in here. And we'll see if we're 5 minutes, better part of 5 minutes away from the next update to see if the grid can turn up and start to see anything. These downward projections are still valid. No upward projections as of yet, other than on the 1. So we're starting to see it print up at 38.01. So they're working toward that fib target 38.12. Here's 04. 0475 has been the high so far. Just got a 1 minute update. Here's 06, 08, 09, almost hitting fib target 1 on the 1 minute. So the dominant pattern that we're watching here is this 5 minute average here. This is where that support held right spot on. And now we've got these fib targets. We almost printed fib 1. We got to 10. Fib 1 target is 1250. Yeah, just for short-term trading, see who's asking that. Kurt, for short-term trading, I use 1 and 5. You can certainly, the 15 and 30, we could put those up there pretty easily. So you can see on the 15, you just have this big volatility range on the grid, and PPMs are pretty positive here on the 15. So that's, yeah, you can use any of these, and this is the point of having the indicators. You can start to go, my setup that I have used for trading, for day trading, is really just that 1-5. And what I'm trying to do is for very short-term trading, just trying to get some things locked in. So this I put on the 1, I want the 5, here we go. So we're trading up almost to the STX level on the 5 minute. But that 10 period moving average, this is that rising pattern through that I always talk about. I'm going to do something here again. I want to get rid of these, and I'm going to put my indicators on again because the colors are better here. I just needed to replace them. Thought I did. Hang on. There we go. Yeah, so you can see the red line rising in that pattern. That's that rising 10, and we've got an acceleration. You're at 1.84, so this is a serious acceleration. Chances are we're going to retest the highs here, which is this pivot. So we just hit fib target 1 on the 1 minute. We're trading above STX here on the 5. I'm sorry, RTX. So here's 15 prints, 20, the 1 minute target is 2450, and then 32, which would print a new high. I suspect if that were to happen, I'm going to draw in a pattern here very quickly. So if we get this pattern here, I'll draw in. This would be a swing objective. We should see some new 5 minute upward projections come in here. And they would be big. They would start suggesting 38, 75 or higher here. Not sure that's going to happen, but that is what's going to happen here right now. So we just got the update on the 5. We did get a RTX sell signal on the 5. Look at the, so we just got some new downward projections on the 5 minute to come in. We went right in between fib target 1 and 2. Now we're starting to fade a little bit again. And the 10, all of a sudden, if you look at, we went from a 1.8 to a 0.93 on the PPM 1 on the 5 minutes. So that tells us that we're right now that S3 would be equal to the 10 period moving average here at 3,800 even. So we traded above 3,800. Maybe we come back and print it on the backside to see what kind of support. But we're still in basically a bullish mode, even though the PPM turned down. My favorite bot showed up. Yeah, I think I should have gotten rid of the bot. So on the 5-minute update, we're still moving toward R2. I'm going to bring this back a little bit. So this was kind of the swings that we're looking at. We held the support. The dominant pattern here was the 5. So that's what's set up here. We printed almost to the fib target 2, 24. What was the high? 23. So we came in within a buck of that fib target 2. And that's the old high were 26 over here. 29 high, actually, 29.75. That 26 number stuck in my head. So 29, so we would barely make a new high if we hit fib target 3. But PPMs are pretty positive. PPM 3 turning up. Everything's running toward this pattern continue higher as we come into the end of the day. Yeah, that's typically what happens. As soon as Powell stops talking, the markets start to run. Yeah, well, Buffett's not very good at his role. The only way Buffett makes money is if he gets government backing anymore. Guy's a joke. Not a fan. That's Buffett about Fruit of the Loom. That trade, that was awesome. Back in the 80s. Never buy an underwear company. So we're trading right here at the 27 handle. 29 is the high. I mean, they're here. They're going to take this out, I suspect. Here's a new update on the 5, so we get follow through. It's interesting. The PPM 1 is collapsing here. So this is interesting. If the 10 period moving average is trying to roll over. So we'll look at what time we got. We're half past. So we spent a fair amount of time. Oh, he's back. Thank you. Yeah, Buffett's got a lot of them. So we're getting a little crossovers on the let me change the scale just so we can see the webs a little better on this platform. I'm going to flip over to TradeStation here for a second. Much easier. You're starting to see the roll on the 1 minute now. This is potentially a top in here on the 5 minute. There's still a lot of positive angles, but you see the starting the slow roll here. The next 2 minutes will probably determine. So yeah, so this was kind of educational. We got to talk about trading, setups, all those kind of stuff. Yeah, I agree, Jason Bourne. So here we go. There's a new high print, or not quite, almost there. Did we print it? Yeah, 28.50. So there's a bid coming in here yet, folks. One of the formations on this 1 minute that I talk about on these webs, this is what's called a rope. You never sell a rope. So we're still printing up there. This is until you get big crossovers and a pattern is set up. You never sell a rope, and this is a rope. So we just printed a 31 high. So they're still printing these things up here. There's 31.75, another new high. So now we're getting tighter. And what happens, these are linear regressions. When these regressions get really tight, it tells you how strong the trend is. So not only is there pattern recognition with these webs, but there's also the trend strength. So here we are trying to print another new high. They printed 75s again. So they printed 175. There we go again, new highs, 250. 34 now. Yeah, they're gonna run these things, folks. There's a run coming here. 35. So we're 135 handles off of there. Is this going to be enough to sucker everybody in that there's a low? Although I did say when we first started, you want to buy the 31 VIX and sell 20. Yeah, I've watched this guy for 40 years. He just sticks his head in the sand. That's how he survived. He's probably one of, in my opinion, other than getting lucky and being involved when America was expanding, that was his success. Peter Lynch is the same kind of guy, just all luck. Right place at the right time. He couldn't do what he did today if he tried. 36 prints. So 37.25, and then it backed off. When you see that kind of reaction where it goes 35 and then they print 5, 6, 8 handles, that was probably the print high. We'll see what happens here in the next couple of minutes to see if we can set this up. I guess, hell, we'll just do this into the close, folks. We'll follow it step by step here. And I'll come back up live once we get done with this. There we go, printing them again. So let's see what happens. Look for these really quick rejections. They'll print the high, and then it just drops off 5 or 7 handles like immediately. We just printed 37.25 again, and then it backed off. And this is typical. The algos are buying here big time. You see this kind of really bright green coming across on this screen here. That is actually the algos buying. So they just printed 39. There's still heavy buying coming in here. So there's 39, now 33, maybe. It's really hard to say. There's 222 bid at 83. Let's see what they do with that. It took them right out. They were like they were not even there. So so you can watch the order book. You can see the size. So that was the biggest order I've seen for a while. 223. They blew through that order like nothing. So now we've got an outside reversal working on the 1 minute over here. Let's go over to the trading view. This is kind of interesting view here. Let me just bring this down so we can see this a little better. Big red bar, big reversal bar. We're starting to potentially get a roll right here. We'll see what sets up. Yeah, I don't think it's QE forever. I actually think that the BOJ 30-year QE is coming to an end, and we have the answer. It didn't work. Japan led the crowd into this mess. I guess they'll be the first to take the real pain, I guess, as we go forward. A little bit of a roll. Five minutes starting to roll over just a little bit. Down to 25, down to 23. Selling off pretty hard, hitting STX on the 1. So we're definitely getting a big reversal here, folks. So what was the high there? We printed 41 high. That's a ridiculous number. I'm going to go over for the balance of this session for the next 20 minutes. Let's go over to TradeStation and hang out there and watch level 2. Here we are at 19. Yeah, see, here's that rounded top I talked about. You can sell right into that. And now we're getting what's called a V-top on the 5-minute. Let me see if I can make this a little more visible. Yeah, so we're getting a big reversal. The last period low was 16.25. We're probably going to take that out. We're going to get an outside bar on the 5. There it goes, 15.50, got outside bar. We are in the final minute of this bar right now. And we are about 50 seconds to go to the close, 14 prints. So we're going to get an outside bar. So this is awesome, folks. We're going to do let's see if on the 5-minute, see if the 3-bar setup works here on intraday. So this is setup. We get the close, we get an outside reversal. Right now, as long as we stay under 19, we're going to have that number. If it trades back above 19, that'll kind of negate that reversal, but it looks like we got a good shot. We're right now, as we come into it, 15 seconds to go. So what you want to do on this 3-bar setup, on the next bar, you want to sell. You want to try to sell a retracement up. There it goes. There's the update. You want to be selling against 16 in here. You could sell here because I think it's just going to go straight down. We're going to get a reversal. So if the next 5-minute bar closes lower, it confirms the outside bar. You should get 2 more lower bars. You'll probably come back into 37.80, 37.90, 37.85 would be the target. So this thing's just going to come apart here. Here's 07, 06 prints. So we're just straight down. You got the rounded top on the 5. Now all we have to watch for here, we're printing STX on the 1 minute. We're through STX, 03 prints. Let me just see where we are. This is the first minute done in 5 seconds. And we'll see an update on the one over here on the far right. There we go. And I like this setup, folks, using a 1 and 5, because what you're doing is you're subdividing every 5-minute bar that you're making analysis into 5 bars. So what we'll look at on the 1 now, can we get crossovers? Can we set up some kind of bottom here and see where it closes? We're still in a potential bullish flag on the 5-minute. If we get back above 19, that's going to be kind of our trigger pivot point right now, is at 19. I'm going to bring up the other, yeah, look at this. There's a big pivot right now at 38.31, and we're looking at the everything starting to roll just a bit here. See what kind of close we're going to get as we come in. Here's 03. We are still 3 minutes away from the close on this 5-minute bar. And all we have to do to confirm it is anything under 12. Here's 01 prints. Like I said, we're probably looking at 87, maybe 80. Here's 38 even. So we are 41 handles off the highs right now. Okay, 2 minutes to go. Just got a 1 minute update. I mean, we're already printing down here 99, 97. This is probably a full out straight down collapse into at least down here to around 90, 92, 90. And then we should see maybe a little bounce on the next bar. Still have 2 minutes to go, back at 38 handle. Getting some little crosses over. I'm just going to follow this right into the close, folks. We'll just keep doing this. So still hanging right around here. Probably the market grid on the 1 minute is got us 38.0809. So I'm going to set up the criteria for this 3-bar chart. Now we may be out of this really quick. Is we are right now, this is the final minute of this 5-minute bar. We are 30 seconds to the end. We're going to get confirmation. So here's the criteria set up for the next bar. Is we have to make a lower low than that bar that we just had. So 97.25. So you make your marks. Let me just write this down. 97.25. 25. Your stop moves down above that of the high of this bar that we're in right now, which is 1250. So 1275 is your stop point. And look, we've already got the update. We've already confirmed that bar. We're at 93.95. So that bar's, by the time I could explain it, it's already happened. Stop goes above the previous bar. It does not have to close lower on this bar to keep this going. My thoughts, if you had this intraday going, if you saw anything that looks like 84 to 80, you just take the money and run. I'm going to go over to the trading view look here. So nice little roll top here. This is perfect. If you did catch that, you could be taking profits right here on a day trade. You don't even have to try to play this out, but we're going to continue with that 3 to 5 bar chart. We'll see where it leads us. Should potentially lead us into the close here. So the stop at 1275 is basically a break-even stop because the opening of that bar was 1250. So basically you got a break-even stop here. So we're starting to get little crosses on the 1. We should probably come back into these linear regressions up. 06, 07 is a possibility here on this bar. And so here, the criteria for the next bar, since we're looking at 5 minutes, by the time I go through it and explain it, will already be there, is the criteria for the next bar is you have to make a lower low. You cannot make a higher high than the previous bar. So it's actually advantageous if you trade up to 04, 05 on this bar right now that we're in. That would be good. But what it also does, what we'll do is whatever the high of this period is, right now we are 2.5 minutes away from the close, we will use the high of this bar right here at 0125 right now will be our stop. So we'll be taking like 11 handle profit if that level is taken out. And so it ends up to be a 2-bar trade. And so you guide this thing really tight with this stuff. Like I said, I would like to see it maybe an 04 print, but we're probably not going to get it here. Still got, let me see what the time is here. We have, in 4 seconds, we have 2 minutes to go. It looks like on the 1 minute we could roll even further. But like I said, if you were to have this trade on, I would be totally looking at 84.80 as a profit target here. We're seeing algo selling. You'll see these big red blocks coming in. Just saw a block of selling coming in. It wasn't a giant block, some small blocks, but we'll just watch and see how this thing trades here. 90, 95, 96. So like I said, your stop would be 3801.50 on this update. We now are, let's see where we are here. 15 seconds to go. Yeah, there is a 3-minute solo video. It's already up on the site. Just look for something. Okay, look at this. I want to stay on this trade. We're starting to get a little trade coming in here. So I think we're going to be stopped out as fast as this bar closes. We are in the final minute right now. Let's follow this trade. 30 seconds. So this 1 minute is setting up. So basically, we're going to get this bar update. Look at this. All of a sudden, they're giving me right before the update. Here we are at 04. But I think we're just going to be covering this. You would cover this immediately. We're short at 12.5 roughly. $04.50. There we go. Just got the update. All right. That's interesting. Look at that, folks. We did not get stopped out of this thing. The high was 04.75, 04.25 on this bar. Now we're printing 91.90. Like I said, here's 87. If I was in this trade right now, I'd be just hammering. I'd be taking profits here. That would have been it. But we'll play out the bar scenario right now. So now this bar does not have to close lower. It cannot. No bar in this sequence after the reversal can make a higher high. That's amazing that 50 cents. It was almost it. So next bar does have to make a new low, but it cannot make a new high again. So our stop is right there at 04. I was hoping for that number. Look at this. Here we are at 86. We're heading down here, folks, to probably 80, possibly into the 75 handle, 77. And I'm going to go over to the trading view from that standpoint. We've got a pivot number on the 5 at 37.60. That could be tested here. Don't buy into this strength intraday. Thanks, Patrick Honeycutt. That's cool. Look at this. Here we go, folks. Coming into 8 minutes to go in the cash section. Here we are about to go to the 200-day. That's S2 on the 1. Let's go back to TradeStation. I mean, this is like perfect collapse, folks. So we have, this is interesting. The third bar is going to be completed on the final bar of the deal. So here's the third bar rule, is you can try to extend it to 5, but normally my concept is always to do in increments of 2. So you would have done 2, you would have taken, you'll take, this will be the scenario. Once this bar closes, if it makes a new low, you take profits off this bar. So right now we've got a bar low of 82.50. And we are, let me get the time on this. We are 1 minute and 50 seconds away from the next update. And I realized something the other day. I'm going back over here. Is there's too much stuff here on these charts. I should have thinned these out, but yeah, here it is. So the last price 37.89. It shows us right here in the 5-minute bar. 1 minute 27 seconds left to the next update. It actually shows you on TradingView exactly what it's doing there. So, but here we are trading 89. The 5 minutes getting into a rope. I think we could go down and test this 60 level. All right, 88. This is basically the target zone. 35 seconds to go for this bar. So if we make a new low, that low is right now 86.50. So we print through 86.50. You take profits immediately on that 3-bar setup. Amazing, classic. Thank you for letting me show you guys that in real term. There we go. We got the update. So I'm more inclined right here just to take profits on this bar. Look at the rounded bottom setting up on the 1. We're probably going to trade back up toward 805 again. They're going to love this 38 handle. So you take profits and run. Take the money and run. It's all yours. Yeah, I'm glad you guys enjoyed this. I'm telling you, get the indicators. You can do this all the time with me in a private room. So I really appreciate, again, all of you that are in the private room I think this was a great idea to do this here on YouTube today. Just remember, get these indicators, and then you can come in, you get a month free. I'm working on some new stuff here, but it's kendallreport.com/indicators. Get them. One-time charge, no subscription, no nothing. Get them, keep them. 30 years from now, think about me. So, like I said, you could, for this fourth bar, you could wait for a new low, or if it doesn't make a new low, you're out anyway. So we'll play out the whole scenario. I'm such a scalper mentality. I'm out of these things so fast. It's crazy. Yeah, folks, hit that like button, right? Yeah, so where are we at here? We're almost into the close, 3 minutes to go. So this is it. We'll start. I'm going to go over to TradeStation so we can watch the level 2 and just see what's out there. See if we get any liquidity at the end. Yeah, so we printed, like I said, up to, I guess on this it shows 39 high. We're back at 89. The theoretical bar setup that we have here is that any new low, you take profits on that reversal pattern, or if it doesn't make a new low, you take, no matter what, you're taking profits here right on the close. Like I said, I think it's a little vulnerable to a move back up to 05. I think there's a shot at maybe moving us back to 3,800 based on this pattern that's out there. But PPMs on the 5 minute are failing here. So hang on, let me put this back up. Yeah, you do have some downside projections all the way down at 30. Like I said, there's 3 of them. You've got one at 62. It's kind of, I wouldn't be surprised if maybe they sell it off afterwards. We'll see what happens. We're down to a minute and change. Yeah, Bruno, there's going to be an effort to do a full masterclass on these things. So thank you, Patrick. Appreciate it. NFL, you're welcome. Thank you. That's true. I gave some pretty good trades out here today. There we go. That's the close. So take the profits. Like I said, it looks to me like they might sell these off afterwards. So that bar, so if we go and review that 5 minute bar, let me spread that out just so we can see this a little better. So we got the reversal right at the top, and it was a key reversal, meaning it was at the top, okay? And when that happens, it's very significant. Not just any outside bar, it has to be at a key top or a key bottom, even a reversal up or reversal down. If you don't have that, you don't have the trade. These only happen. This is considered, even on this 5-minute chart, as a key reversal. It was happened at the high of the day. So, but yeah, so this bar, this fourth bar, since it did not make a new low, even if it had made a new low, you take profits. So it's literally 3 bars. The fourth bar, new low, you take profits. Or if it doesn't make a new low, or it takes out the previous high, is it. And there is a video out there. There's a number of videos out there, folks. I'm not sure if where there's different categories on the channel. I'm not sure if we have them categorized right, but there are things on how to use the PPMs. There's things on how to use the market grid. And, you know, that was, there's some there. And the plan is possibly to do like a virtual event. I'd love to do a big conference that we had on Friday. We did a live trading in a big room. Would be amazing. Yeah, no, thank you. Listen, these setups are so classic when they happen. And back, let me just come back on screen here. Yeah, so back in the days of floor trading, we used to have a thing on the floor. We call them a do. You just, when you see certain things, you just do it. Like that reversal trade that we saw off of the spike off of the news. They spike them up, you sell them, bring them back in, like 2-minute trade. And that's an automatic trade. There's just a lot of things. And I really am trying to get a lot of this knowledge and stuff out there so that you folks can use this. Yeah, you're probably right. Popping while standing. You're probably right. That's something we're making an effort on behind the scenes, just to have, like, here's, you know, a video on each indicator and how to use them. And these trading sessions that we do, you folks basically went through one, and all we used today was PPMs, some basic simple moving averages, the price projection tool, and we use the market grid. And those are the main staple. If you have those things and you learn how to just read them, if I never told you anything, you would figure them out. But that is the plan, is to get that out there. So, yeah, a good session. I'm glad we did it this way today. It was fun. But this is what I would have been doing anyway for the most part. So we were able to do it. I just didn't do any live trades. I've been instructed not to do live trades on YouTube. So I'm behind the firewall. That is happening, so you can actually see exactly what's going on here. Okay, folks. I guess this will be it for this session. Appreciate everybody. I'll be out there tonight. It's Wednesday night. We got Wednesday night, Thursday night videos yet. I don't think anything changed today. Just to summarize what we watched today, I don't see that anything changed fundamentally whatsoever. Everything that existed yesterday still exists today. The Fed, if someone thinks it's good that they're not doing 75 basis, that they think that's bullish, they're going to find out something different. They should have done 2 or 3% today. Okay, so this is what the tack that they're taking is just going. I mean, some of these estimate numbers that they have, I'll go into some more detail once I've had some time. I'll watch some more of the press conference just to see what kind of stupid things were said. But the reality is, what they're doing is not going to change it. It's not. I'm not saying the market can't rally. It could go back to, I don't care. It could go 4,200. I don't care about that. what I'm telling you is fundamentally, when you start to look at the macro, nothing changed today and nothing's going to change for a while. So these influences on the market are going to be around for a while. So don't expect that magically, they're going to only do 50. The fact is, if they're only going to do 50 basis points and meetings, this isn't going to be the normal. That is the mistake in itself. And we're going to find out a lot of things over the next, let's say, 4 to 6 weeks. We're going to find out if the Japanese are really selling. They managed to flip the yen back down. So as the market rallied, we saw that reversal on the initial action. We saw that flip down. And I'm not going to bring it up, but I just want to look at it quickly here just to see where it went out at. Yeah, so we got pretty close to those downward targets. So the Dow yen was down 1.8%. That's what they wanted. They came in and intervened twice this week. So big, actually, this is interesting. I am going to bring this up, okay? Look what we got on the yen here. The Dow yen got an outside reversal bar. So you've got PPM 1 rolling over. This is daily chart. Let me go full screen. Thought I was done, but I saw this. This is worth bringing this up. So what we've got, we're trading right on the 10-period moving average. It's at 0.26, so it's probably going to hold here. So we'll see if we can get a follow through, but theoretically, higher opening tomorrow, the next session, you would be a seller of the Dow yen, buyer of the yen, and then you would look for it to come back, probably come back into 130, 133, 134, something like that. But this 10-period moving average is going to be dominant here. And even though it's crossed its first derivative, it's still up 0.26. That's still probably enough to hold. Is only a 40% probability. Only a 40% probability for it to roll over here, probably get consolidation, see what sets up next. But there's your reversal pattern on a daily on the Dow yen. So anyway, folks, thanks again for watching. And I'll finally call it quits. There's just so much stuff going on that it's hard to quit this stuff. But I'll be back tonight. We'll see how everything trades. And I appreciate everybody watching and participating today. I hope you enjoyed it. It was really a nice session to go through and actually use the indicators, show you what they're all about. And, if you want to find out, you come in the live room. We do quite a bit of stuff. A lot of times it's day trading on the E-minis, and other things are sometimes we're setting up. We did an ETF. Occasionally we do ETF hacks where we'll build a portfolio with our software. So you have to remember what I really do for a living is we manage billions of dollars of assets with our software through an investment advisory community. So that's what we do for a living. YouTube is a communication tool, and I'm giving back to the community, bringing out the indicators and some of the knowledge. So I really, really appreciate everybody participating. And remember, hit that bell, hit the notification bell, subscribe. If you spent all this time with me today and you didn't subscribe, shame on you. Just do it and hit the like button. So we'll talk to you tonight. We'll see you approximately 9:30. By the time I get everything set up, sometimes I've been coming in a little later, but we'll say between 9:30 Eastern PM and 9:45. Thanks a lot, everyone. We'll see you later. Thanks, Patrick. Buy the indicators. Have you done that?